Welcome back to quantreef.com. Sol sitting right around 73.55, squeezed into a tight pocket just under a key fib level. That makes this a good spot to slow down and actually map it out: liquidity, support and resistance, VWAP, fib, fair value gaps, positioning, and where price is likely headed over the next several hours. Let's get into the chart. Price is at 73.55, sitting just under the 0.382 fib retracement near 73.77. Structure score reads a modest 65, and the label on this one is neutral, risk-off regime, not a clean trend either direction. Momentum's mixed because price keeps testing that fib zone and getting rejected rather than accepting above it, which tells you neither buyers nor sellers have fully taken control yet. Session VWAP sits at 73.59, basically right on top of current price, so we're not getting clean acceptance above or below value here. That's usually a sign of indecision. The anchored VWAPs from the recent swing sit lower, around 73.10 and 72.65, both beneath spot. Price trading above its anchored VWAPs is generally a mild bullish tell, but with session VWAP this close, it's not a strong signal either way yet. The liquidation map shows the bigger pool sitting below, around 71.65, carrying roughly $79.5 billion in notional versus about $56 billion stacked above near 74.38. That skews the liquidation percentages 59 downside versus 41 upside. Markets tend to drift toward the fattest pool of resting stops before reversing, so there's a real pull toward that lower zone, even though the nearer wall above is closer in price and could get tagged first on a quick spike. On the screen right now, resistance above is the fib 0.382 at 73.77, then the stop-loss cluster up at 74.50. Below, support comes in at target 172.31, target 270.53, and target 369.06. Given the stop hunt risk is flagged high, I'd watch the upside stop cluster first. A quick poke through 74.50 would likely trap late longs before any real reversal down toward those support targets. Above price, there are two daily bear gaps, one between 78.83 and 80.34, another way up near 87 to 88.55, both distant and only partially filled, so they're longer-term magnets rather than anything relevant right now. Below, there's an untouched 4-hour bull gap right underneath at 73.23 to 73.46, plus another 4-hour gap near 72 to 73 that's almost half filled. Those nearby gaps have high revisit rates historically, so a dip back into them wouldn't be surprising. The swing here runs from 75.27 down to 70.53, and price is sitting inside that range, right at the 0.382 level near 73.77. That's acting as immediate resistance. Below that, 0.5 sits at 72.90, 0.618 near 72.34. If price loses the 0.382 cleanly, the 0.5 level becomes the next thing to watch for a reaction. The card reads N81, HTS 60. Volume and liquidity score is strong at 86, institutional positioning is solid at 71, and behavioral sentiment's decent at 68. All leaning constructive. But statistical volatility is weak at 36 and the fib location score is soft at 48, dragging things back toward neutral. When strong volume conviction fights weak volatility and location readings like this, the honest read is genuinely balanced, not a hidden bias in either direction. Retail's leaning long at 71.45%, and so are the top accounts at 73.73%, with top position longs at 63.73. But the 4-hour taker flow actually flipped slightly short, 48.4% long against 51.6% short, with dollar flow near 3,500 million long versus roughly 3,700 million short. That mismatch, crowded long positioning against slightly heavier short side execution, is exactly the setup where a squeeze could come from either side if stops start cascading. Given the bigger liquidation pool sits below near 71.65, that's the more probable magnet over the next several hours, especially with reach odds putting 50% on the 12 to 24-hour window down there versus lower odds on the upside pool. If sellers push through the fib and the nearby bull gaps 72.30 and then 70.53 come into play. If buyers instead force a sweep of the stop cluster near 74.50 first, that could trap shorts before rolling back over. Worth remembering, SOL largely takes its cues from Bitcoin's own liquidity structure, so whichever way Bitcoin's book is leaning can override a clean-looking SOL setup entirely. Check that before leaning either way here. The bearish case fades a sweep of that strongest wall near 74.38, entry around 74.38, stop near 76.23, with targets laddered down at 72.31, 70.53, and 69.06. The bullish case looks to fade a downside sweep near 71.65, stop at 69.66, target stepping up towards 73.58 through 74.04. Both sides are structured around fading liquidity grabs, not chasing breakouts. Risk is defined by the stop, not by conviction. So we're sitting right at a decision point. Whichever side pulls in the bigger pool of liquidity first probably sets the tone for the next rail move. If this kind of layered read is useful, drop a like and subscribe, and know that quantreef.com runs this same 9-layer structure, probability, and liquidity breakdown across more than 100 coins, with a 7-day trial if you want to dig into more names. And to be clear, this is all educational content, not financial advice.